Hi there, Shingirai here again with another update on portfolio performance over the past week. On a one-week basis, 7 out of 10 of the CBAM portfolios outperformed their respective benchmarks, with returns ranging from CBAM 3 returning minus 0.21% down to CBAM 4 V2 returning minus 0.03%. In terms of main contributors to performance, we did see some recovery from some of our active fund managers there, and you would see Allianz Continental European with a bounce back of about 1.97% on the one-week basis, and as well alongside our BlackRock UK large cap position up 1.42% on the one-week basis. In terms of detractors, we continue to see some weakness there for global gold miners and physical gold, which would both be down more than 2% as investors mull the investment case for the non-returning asset class. On the one-week basis, 3 out of 10 of the CBAM portfolios outperformed their respective benchmarks, with returns ranging from CBAM 5 returning 3.44% down to CBAM 1 V2 returning 1.04% on a relatively risk-on start to the quarter. We continue to see tailwinds for Japanese equities with our fund managers there through JP Morgan, both the hedged and unhedged versions returning more than 7% based on a weaker yen, some political stability there with the Liberal Democratic Party, and China obviously optimism on reopening, which is of course a large trade partner for Japan. In addition to this, we saw some bounce back from our barely gifted European position on the one-month basis, up 6.68%. And that is something that will be interesting as well, where we see some recovery across UK, European, Japanese and US stocks. In a week, just last week, we saw US markets having the best week that they had in 3 weeks. In terms of detractors from performance, again, the usual suspects. We see weakness from gold and gold miners, both down 5.45% and the miners down 15% on the one-month basis, as investors again mull that zero return asset in a rising yield environment. Yesterday we had an update with the Hypnosis Songs Fund, which is still considered to be a strong diversifier, and the results calls as of end of March this year indicate a strong revenue growth, and again we still do appreciate the diversification effects of holding the alternative asset class.